Hello, everyone. Hopefully, you're having a good day. My name's Andy. My channel's Finding Value. I was reading through some articles. I wanted to capture some of this and let you guys know what I'm reading. I thought it was pretty interesting things. And it deals with commodities, it deals with investments, it deals with electric vehicles and renewable energy. It deals with all those things. So, one of the articles I was reading, it's right behind me. China offers oil reserves in unprecedented move to cool the rally. So, they are releasing oil, at least from this article, is saying that they're releasing oil from their strategic reserves. They're saying that they released it, and here's the move downward from them releasing it to try to hold and cool off oil for a little bit. So they are in there. They're trying to manipulate prices, but in the short term, yeah, you can be successful at doing it. In the long term, no, I don't think anyone's really been that successful at trying to manipulate prices for any length of time. Now, I also looked at another article. It says metals. Copper eases on China decision to sell reserves. That was June 15th, 2021. Copper is one of the metals that we watch in commodities. It's a leading indicator, but they're in there trying to suppress the commodity prices because they've been on a tear. So they are releasing things from strategic reserves, but it's not going to last forever. This is going to be short-term, short-lived. And I don't think there's any good reason to worry about this. This is a dip that you want to be buying. Now, also, I was reading some other articles. The world will run out of EV batteries by 2025. And I was looking down through here. I was looking at the metals that were specifically going to be short. They said, and then there's the issue of those pesky car batteries. While you can cut down your carbon footprint by a massive margin by switching over to an EV, you just can't get away from using finite resources completely. EV batteries contain a litany of expensive and finite rare earth metals and minerals, most notably cobalt and lithium, which cause tricky negotiations with global supply chains and which are not without their negative environmental externalities, thanks to sometimes messy mining operations. But they're saying that some of the battery minerals are going to run short by 2025 to 2026. The person who did the study, and now according to the new Bank of America Global Research Report, the global EV battery supply is in danger of running out completely as soon as 2025. So it says our update EV battery supply demand model suggests the global EV battery supply will likely hit a sold out situation between 2025 and 2026. With its global operating rates reaching above 85%. So that's what Bank of America Global Research is saying about EV batteries. Now, the only thing that I'll say about this is if batteries become scarce, and I also think there's going to be a scarcity in copper. That's why I'm loading up in some of these copper royalty companies like Nova Royalty. And I'm not trying to sell this by any means, but I like the royalty companies. There's a lot of very good traits that Nova has. They're acquiring assets, royalties that is, on developing projects. They're getting a very good price for them, and their counterparties are major companies. You know, First Quantum, Antofagasta, not Glencore, Anglo American Platinum, the big boys. And I want them to be the counterparties because they have money, they're well funded, and they can get money if they need it. That's why I'm really excited about a company that's really going after these tier one assets. I agree with their strategy, and I think it will be successful for a long-term hold. But if copper becomes scarce, we need to think strategically about this. If solar panels and electric vehicles, if they require copper and they become scarce, how could you get energy with the copper scarcity? Well, you want to consolidate in a smaller area your energy, like nuclear, which is emissions free and can produce a lot of energy in a very small area. So you can run copper lines right to one spot instead of spreading it out amongst a whole bunch of different solar and wind farms. So I think nuclear is going to be an exceptional play based off of a copper shortage. Now, with this shortage, EV batteries, we might go into a hydrogen economy. And there's already a bunch of countries like Japan looking at hydrogen economy instead of these batteries because they know that this is going to lead to shortages. So hydrogen, I think, is going to be in our future if they push that emissions the non-emissions button. Hydrogen is a energy transmission source. It's basically a battery, and you're going to have to get hydrogen from something else. Usually it's from water through electrolysis or through natural gas. So it's probably going to be from water. But then you're going to have to figure out, how do you break all this stuff up, water into hydrogen? And it's going to take a lot of energy to do it. It's an energy sink. But if we don't have the batteries to do it, hydrogen is going to be the answer. And that's why I'm so heavily invested in platinum. Platinum is used in fuel cells, at least at the current designs, for hydrogen fuel cells. Now, I was reading another article here. It says net zero and just the costs it takes. Net zero by 2050 may need up to $173 trillion in investments. My Lord, that is an incredible amount of investment for going to a net zero by 2050. It says the world may need to invest up to $173 trillion in a greener energy infrastructure and supply over the next 30 years. It says the energy transition that would be compatible with the net zero world in 2050 would need rapid scaling of investment, the research firm says, adding that the route to net zero remains yet uncertain. Somewhere between 3.1 trillion and 5.8 trillion per year on average over the next 3 decades. Insane amounts of money. They say there's no time to waste. If the world is to achieve or get close to meeting a net zero by mid-century, then we need to accelerate deployment of low-carbon solutions we have this decade. And that's basically, I just wanted to touch on how much investment is going to be needed to go into basically what they consider to be net zero emission type stuff. 173 trillion. So when I'm looking at investments and I talk about solar and wind, and if they're going to throw trillions of dollars at this, that's why I said I'm going to get a little bit of money in it. So what my strategy is here, and I'm looking at all these articles, I'm gathering all this data. If copper is going to become scarce, if silver is going to become scarce, if platinum is going to become scarce, I'm looking for physical metals. I'm looking for royalty companies that are diversified and to get that money to me. If it's going to be during an inflationary environment, which I think it's going to be, I'm trying to get royalty companies that aren't subject to the inflation input costs. They just get a percentage of a certain amount. That's where I get real excited about. I think uranium, if we run into shortages, is a viable option for base emissionless energy. It's one of the safest energy sources too. So I think that definitely fits within this whole regime. And even if this renewable world doesn't happen, I still think nuclear can fit in the world that we want. So it's a win-win in my opinion. And with the valuations where they're at today, it's a screaming buy to me. Uranium, that is. So we've got copper, uranium, and then we got the rare earth type of electric vehicle type mix. If they're going to try to build all these electric vehicles, and let's say they're successful at doing it, I think rare earth metals, lithium, cobalt, I think those are the spots to be. That's why I went into REMX. That's an ETF that covers a lot of those cobalt, lithium, and rare earth metal investments. That's probably the best ETF that I can find that covers all of it. And a lot of it is in China, which are producers of these things. That's where these things are going to be produced. That's where it's going to be mined, manufactured. I want my money there. That's just me. So REMX is the one that I prefer for that vehicle. So I'm looking at this, and if we don't have the minerals, if we don't, this is kind of another play that I'm looking at, and I'm already in it, and a lot of people on the channel are already in it. If they can't build this out, if they can't build this emissionless vision that they have because of mineral shortages, we're going to have to burn something. We're probably going to have to burn fossil fuels, which is oil and natural gas. I am heavily invested in oil and natural gas because I don't think that we can pull all this stuff out of the ground at the rates that they think they can. So then you're playing, basically, they're reducing investments to oil and gas. They're saying, don't invest anymore, stop this over here. But I don't think they can ramp and replace the oil and gas that is lost over time with electric and renewable power. So now you're basically taking the known fossil fuel source that everybody has already, You're reducing investments over here, so your supply is going to start declining quite rapidly. They're going to try to ramp this up. But if there's any sort of problem in the ramp up of renewables, fossil fuels are going to go ballistic, because everyone's going to say, I gotta do something, and they're going to dump money in buying gas and getting from A to B if this plan doesn't work. Now, I know I'm just looking for kind of a 5 to 7 year hold when the dollar goes down. If this transition doesn't work out very well, we're going to be right there at 2027 to 2030, where all this is going to come down right at the end of a massive commodity boom. So I don't know how high oil is going to go. I mean, I really do think it could go $300, $400, $500. And I know that could be $8 to $10 a gallon, but I'm not saying that it's necessarily going to get there. What I am saying is it's possible, and that the conditions that these investments and the problems that they can encounter with ramping up renewables and with the potential investment shortfalls that are occurring in oil and natural gas is setting up this gigantic opportunity if things were to go wrong with this transition. So that's where I am. Now, there's many things that can go wrong. I just read the article here about rare earth metals, lithium, cobalt, the strategic metals that are going to go short in EVs. Now, there's also copper as well. If we don't have all the copper that everybody wants, we could go short in copper, which blows up this whole renewable thing. So there's a lot of risk over there. And if everybody buys EVs and you just go to plug it in, we have to upgrade our entire infrastructure. I don't know if that infrastructure is ready to take on this much demand over the grid. There's a whole bunch of things going on here. There's a lot of risk on the renewable side. And it's like, I'm going to throw some money betting against it. But I'm also betting money for it. So I'm taking both sides here. And that's what I wanted to share was the articles here, kind of my strategy, my vision, investment strategies, and what I see in the future, and kind of my thoughts on it. If you guys like this content, give me a thumbs up, subscribe to the channel if you haven't subscribed already, and thanks for listening. This is Finding Value.